I was interviewed by Isabelle Docto from Daily Hive. The link is just below this video. And it's also on my blog. And she has two really interesting questions that didn't make the final cut that I think are just too interesting to leave out. So the questions are, how can you get a very large tax refund? And are there any other tips and tricks people should know? So I suggest read the article. There's the link there, the best ways to get a bigger tax refund, and then watch this short video about two interesting questions, including how can you get a very large tax refund? All right, so the first question, how can you get a very large tax refund? So the most effective tax planning usually comes from focusing on your tax bracket. For example, if you're in a 40% tax bracket, contribute just enough to your RSP to reduce your income to the bottom of the bracket. That means you get a 40% tax refund on every dollar you contribute. The same applies to any other tax deduction that you may get. So getting your maximum refund is often targeting your taxable income to be right at the bottom of your marginal tax bracket. This gives you the largest refund for all your tax deductions. So now when I see huge tax refunds, such as 30,000, 50,000, or 100,000, they are usually investment related. So the most common are large RSP contributions from the RSP gross up, or especially the RSP catch-up strategies. Quite often, they're from borrowing a large amount to invest from the Smith maneuver or the Rempel maximum strategies or other leverage methods. Sometimes it's a specialized or speculative investment flow-through shares, but it's most commonly RSP or borrowing to invest. Now, RRSP gross up and RSP catch-up strategies are exceptional ways to get much larger tax refunds while saving a lot more for your retirement. The RSP gross up strategy allows you to contribute 40 to 70% more to your RSP without affecting your cash flow. Contribute a larger amount in February before the deadline that you should get back from your refund. For example, instead of getting a $5,000 refund in March and contributing it to your RSP, contribute $8,000 in February, which increases your refund to $8,000 to give your money back. Yeah. So you just contributed $3,000 more to your RSP, didn't use your cash flow. If you do this every year, you could retire with a 40 to 70% higher income. So now, the huge tax refunds tend to come from the RSP catch-up strategy. So if you have lots of room, you can maximize your RSP in one shot. For example, if you have 200,000 RSP room, I had a client like this recently, refinance your home to get $200,000 to contribute to RSP in one shot. You do not have to deduct it all that year. Not everybody knows that. Just deduct the amount in your current tax bracket and carry the rest to next year. This could give you a $100,000 tax refund or 25,000 tax refunds for each of the next 4 years. So now my last post has more details on the RSP gross up and the RSP catch-up strategies. So large tax refunds every year, people that get them like every year, usually come from from borrowing a lot to invest with the Smith maneuver or Rempel maximum strategies. The Smith maneuver can start small, but usually builds to be a tax deductible mortgage or credit line for 80% of your home value. So it gets to be a big number. The Rempel maximum can be a lot larger depending on how you do it. For example, borrow $1 million to invest over time with the Smith maneuver or all at once with an investment loan and the Rempel maximum. With today's interest rates, you get a tax deduction of about $70,000, which can be a tax refund of $35,000 with tax efficient investing. If a couple both get $1 million investment loans, you can have a $70,000 tax refund. And you can get big refunds like that, most years. So the Smith maneuver and Rempel maximum in practice give you tax refunds in most years with tax efficient investing. The interest is fully deductible every year, but the gains are taxed at half the rate and mostly many years in the future. So the first while your investments are growing, you have hardly any tax capital gains yet you get this big, huge interest deduction every year. Now, the other question is, any other tips and tricks you should know about? So now the really interesting is, in April, the new first-time home savings account, FHSA, should be available. You'll hear a lot of talk about that this year. I'm calling it the Renters RSP. That's the great nickname for it, the Renters RSP. It's a great way to save for anyone that's not a homeowner, whether or not you plan to buy a home. You can contribute up to $8,000 per year for up to 5 years. That's $40,000 total, and get a tax deduction. Like an RSP, like an RSP and invest it like an RSP. So you get a tax deduction the same way. If you invested for a home, the withdrawal is tax-free and you don't have to pay it back. This is in addition to the $35,000 you can borrow from your RSP with a home buyer's plan. So if you never buy a home, you can transfer it to your RSP. So it's never lost. In other words, it's a great way to save for a home and get a free $40,000 RSP room for renters. So now if you do not own a home, plan to start contributing this year, so start making the plan for the cash flow even before your RSP contribution. So watch for a post soon. I'll have one probably in the next few weeks about hacking the first-time home savings account, FHSA, the Renters RSP. Okay, thanks a lot for listening. My name again is Ed Rempel. My blog is Unconventional Wisdom, and which is the #1 blog in Canada for a financial planner. If you go to the blog, you could please like and share the blog, and also you could, if you subscribe to the blog and my YouTube channel, all that means is you will get my weekly video or article or podcast sent directly to your email every week. Thanks a lot for listening, and talk to you next week.